Welcome, dear traders. You're watching a recap of the Asian session. This week, the Fed's monetary policy remains the main market driver. Central banks in the Asia-Pacific region are also trying to rein in inflation without hurting economic growth. It will help them avoid a recession, and this is why forex and stock markets react sharply to the news on a monetary policy. Japanese and Australian stocks kicked off the day with a drop. Manufacturing activity in Australia improved significantly in February. In Japan, factory activity shrank at the fastest pace since August 2020. However, the internal economic reports had a little impact on the market sentiment in the region. The Reserve Bank of New Zealand will announce its rate decision tomorrow, and the Fed meeting minutes will also be released tomorrow. Perhaps they will bring more clarity on the inflation outlook and the Fed's further steps on interest rates. Hardly does anybody doubt that the Fed will stick to aggressive tightening in the long term. Besides, the regulator has a room for maneuver given the latest macro stats. The US economy turned out to be more resilient than expected. However, inflation is still very far from the 2% target. On the top of that, Fed policymakers made rather hawkish comments last week, so there is a high chance that the tightening cycle will last until June of this year or longer. According to the FEDWATCH tool, nearly 18% of traders are betting on a 50 basis point rate hike in March, while investors are revising their forecast on the Fed's monetary policy. The US dollar is steadily rising. It's recouping losses incurred earlier this year. It has already recovered to 104 versus its main rivals. Strong US economic data boosted the US dollar at the start of the week. In the Asian session, it was moving in the upward range of 103.80 and 104.20. Although it was quite volatile, it managed to reach 104.10. The high volatility is caused not only by economic reports but also by political factors. Geopolitical tensions are mounting due to the Joe Biden's visit to Kyiv and to the launches of North Korean ballistic missiles into the sea of Japan's west coast. The yen is unable to regain ground. Activity in Japan's manufacturing sector declined at the fastest pace since August 2020. Investors are assessing the prospects of a policy reversal by the Bank of Japan under the new leadership. The central bank will be headed by an economist for the first time in its post-war history. Will Kazuo Ueda change the monetary policy stance? This is hardly unlikely. Besides, both members are in favor of a further monetary easing. Hirohiko Kuroda may still surprise markets at the last meeting on March 10, and the greenback is grabbing higher amid expectations of a strong PMI indexes and a home sales data. The yen, on the contrary, is edging lower, and the dollar-yen pair jumped to 134.80 in the morning. The yen also remains weak due to uncertainty over the Bank of Japan's future moves on the monetary policy. Therefore, the pair may rise above the range of 134.20 and 134.80. The US dollar is grabbing across the board today. Commodity currencies are particularly sensitive to its pressure. The Australian and New Zealand dollar traded in the Asian session in the bearish corridor. The Aussie tried to find support in the Reserve Bank of Australia meeting minutes, which were published today, and the only positive news was that the regulator would not stop monetary tightening in the near term. At its first meeting in 2023, the central bank could raise the rate by 25 or 50 basis points. It's less hawkish than the Fed, which means that the Aussie will hardly be able to advance versus the US dollar. On the top of that, the US economy is strong, while consumer prices in Australia are still rising. The AUD-USD pair again tested the key support level of 0.6870. It reached this low on January 19 and February 6. In the Asian session, the pair was trading at 0.6881, not far from that level. The bearish sentiment was strong, and the pair was moving in the range of 0.6868 and 0.6920. Thus, the Aussie is likely to keep declining. Sellers may push it to the support level of 0.6750. If the pair grows above the resistance level of 0.6930, the bulls may regain the upper hand. The prospects of the Kyiv are even less optimistic, and New Zealand is dealing with a high inflation, a crippled economy, and the consequences of a devastating hurricane. Traders are extremely nervous in anticipation of the Reserve Bank of New Zealand's rate decision. The first meeting of this year will be held tomorrow. The regulator is likely to raise the rate by a quarter point. Overall, the watchdog hiked the rate of 5 times by 50 basis points in a row in 2022. The central bank may also take a pause in monetary tightening due to economic damage delivered by Cyclone Gabrielle. The Kyiv was rather volatile, and the Kyiv dollar pair was trading at 0.6232 in the Asian session. It was hovering in the downward range of 0.6208 and 0.6263. And that's all for now. Subscribe to our channel and keep close tabs on the market developments. See you soon!